Good day, everybody. It's Trent Klarenbach with Klarenbach Research. Today is June the 25th, 2025, and I want to talk about green lentils today. And it was spurred on really by some conversations last Friday with a couple buddies. One's in the industry, the other one's a producer, and talking about what we thought we'd see on large green lentils in the coming crop year. You can see right now that I'm bearish, and my sentiment rating is bearish across all three of our time frames, right, from 1 week out to 4 weeks plus. So I don't see any reasons to be bullish large green lentils in Saskatchewan at this time. Our bearish sell signal was published back in March. That was triggered, and that number was at 55 cents a pound. We're trading around that 42 cent level. The index is around 42 cents. And you can see here that our KPI, the average price for the year of our index, was 54 cents. So we're 1 cent above the average for the year and currently 13 cents above the current price. So if you sold the sell signal, or when I got sold when you got the sell signal triggered and didn't hold, you'd be pretty happy, I think, at 13 cents. Our goal is to be within 90% of the high price of the year and to beat the average price for the year. And so far, we've been able to do that in 3 of the last 4 years. So we'll keep working at improving those and tracking those records. So I had a conversation here on last Friday, and the producer was asking me and a buyer what we thought would happen on large green lentils. And one of the comments from the buyer was 25 to 30 cents by Christmas. Okay, so that's interesting. So that's quite a bit below what we're seeing right now. And that's a bleak outlook in my mind. So that would take us down to my chart. 25 cents is down here, way down here, and 30 cents is up above. But so from a technical point of view, what are we looking at? I am hoping we get some support here at 42 cents. That's the last 40 to 42 cents was the previous low back here in August of 2022. And there's a moving average here, 200-month moving average that may act as support. But really, I think once it breaks below 40 cents, and I think we're going to probably see a rapid decline in prices. My next level of possible support would be at 37 cents, and then again down here at 31 cents. So I think I talked about 32 cents next year as maybe next level of support. But if that doesn't hold, it takes us way down here, right? So there's really not much support, in my opinion, of keeping the price up. If we drop below 40 cents, I think it's going to go lower in short order. So keep an eye on that. Consider that when you're pricing making your sales. I see some new crop at 34 cents. I'm not sure exactly where that is, but I see those numbers out there, which would bring us down to, again, that area of previous support that I mentioned earlier. So that's interesting how that works out. Yeah, as far as the upside for the new crop year, once we get down to these levels, if we don't find support at 34 cents and we're looking at 32, 32 gives away. Of course, 30 is a round number. It looks to me like the trend is changing. Let's look at the weekly chart here just to get an idea of what that's looking. Yeah, the weekly chart, this is our area. We break below 40, 42 cents on the spot price, and it's definitely going lower. But I look at these moving averages, and I'm not convinced we don't get one more rally, but I think the upside would be 50 cents. But I just don't see that happening at the moment. The chart is not giving me any indication that we will see a rally at this point, and the best odds are in a continuation to the downside. My name is Trent Klarenbach. It's sunny in Saskatoon. Life's good.